All right, what's up, everyone? Thanks for joining in. I appreciate every one of you guys. If you could go ahead and like and subscribe to this channel, that helps me a lot. I know you guys reach out to me individually. That's perfectly fine, but I'd appreciate if you guys hit that like button and leave me a comment. I know I talk about a lot of stuff, but if there's something that you want to see, just hit and put a comment in there. So back to school session. Want to go ahead and get started and talk about the YM, the ES, and the NQ. Let's see what's happening this week. Talk about what happened last week. I know school is back in session, so you'll hear my kids in the background. I hope you don't mind. That's just the way it is in this household. There's stuff and activities going on. I'm going to get right into it, and let's talk about what is happening. Let's start with okay, so I have the MNQ already up, which is very similar. Why don't we start with the NQ? I trade MNQ for the little guys who would like to follow the same process on the NQ, but just don't have the large capital, or at least a large bank account, or account size. So I show them how to do the same thing on the smaller E-mini micros. Same concept. You're just trading at leverage at a lower leverage. So if you want me to explain that to you guys, hit me up and let me know. Again, hit that like and subscribe button. Really appreciate it. It goes a long way. Let's get right into it. Let's look at the NQ. I know we talked about. Okay, look, if this is and I have this already set up from last week, right? Remember what I told you. We had the highs up over here. We had the fibs going over to the highs and trying to match exactly where things were going to be. I had already put the resistance area as well as the support area, and you'll see that in the support area it broke, it went down, and that's what I was talking about. Like if it broke this support area, it's going to go down and hit the lower band, and that's exactly what it did, right? We were looking at, okay, so what's going to happen? Look, it was on the mid band. It was trying to figure out whether the mid band was going to hold. And this is the Bollinger Band. I recolored it so that you guys can see everything on the same chart. I'd like to not clutter my charts, but just for the video, I want to make sure that I show you what I'm talking about. The peach color is the Bollinger Bands. The green is the 50-day moving average, and the yellowish mustard looking is the 200. So the mustard looking is 200 because it's slow. The green is faster, the 50-day. That's why I have that. I didn't put the RAM indicator on this because there are just too many things on this indicator right now to kind of show you. And I don't want you guys getting scared and like, oh my God, he's got too many things. What I want to do is I want to explain to you what I'm looking at. And I'm looking at the fibs, which is pretty important, right? Along with the Bollinger as well as the MACD and RSI, right? So over here, we broke that support line. We went below and is now at the lower Bollinger Band area, right? So now we have to see how long this is going to hold the next couple of days. If that breaks, we're looking at the downside of right here, the 720-ish area. And that could happen just because we're very close to this fib mark, right? And when it does touch it, this is where the area where you might want to look at a long. And the reason why I say that is because you still have the 50-day above the 200, and there's still some room for upside. And as you can see on the MACD over here, it's going towards down, but there's going to be this area that we want to, actually this and this area, we want to kind of look at, right? You want to see if the lower portion of the price action is going to touch there. And if it does go beyond this, actually, I might have done it too. This was the lowest right there. Okay, so that is going to be the support area. You want to keep an eye on the next couple of days, the next few days, see where this mountain is going to go. If it breaks this mountain to the lower side, then there's more downward pressure. Then what it's going to do, price is going to try to navigate and gravitate towards the 200-day moving average, and that we'll see whether it holds, right? So be careful on the long side. You just have all this pressure down here. Then Then what's going to happen is we'll see whether there's a support or not, and if it is, it'll pull back up. Whether it goes to the higher high, we don't know, right? Because then you have the next leg after this support is this right here. So you do have some sort of support level where longs could actually look for opportunities here, and then in the next few days this could slowly creep up as well, right? So this is an area where you want to kind of focus on, see if there's an opportunity for longs. Now you want to be careful of the whole market condition. Make sure you listen to some sort of news to see what's going on. Obviously I don't look at particular stocks, so this is an overall general market sentiment as to where things are going to happen. So look at it from that perspective. Let's take a look at the Dow. So the Dow, let me move all of this. I don't like to put the open interest in there. All right, so let's see what we got here. Similar situation. We had last few days, we were looking at the 50-day as well as the mid band, trying to hold it. It didn't. It broke down below that, and now it's at the lower band. But look at this on the YM, we're getting close to the 23.6 fib, as well as we have another support line from over here, this one right here, and then we have the 200-day moving average closing on, right? So what's going to happen? We might find some support. There's a lot of support in this area, so if you're looking at longs, maybe this is an opportunity to try to capture some of those longs on the way up. Now, remember, again, we're always looking at this as well and see how this is going to be area next few days to see, okay, look, over here, this one was the big one, right? But then this one broke down, so it went down further. Now this leg right here, the next mountain we want to see, is there going to be upward movement? And the only way we can tell is if there's a shorter mountain. You want to see a lower mountain size, right, on the upside down. And when you see that, overall, if you're looking at the angle, right, you're seeing this trend upwards. And when that breaks, that's when you'll see further pressure downwards. But right now, there's some opportunity to get in on its way up, right? So that's what we're looking on the YM. Obviously, remember those key areas that I mentioned. And then let's go take a look at the ES. All right, so what's going on with the ES? And this is the S&P 500 E-mini futures. Everything you see pretty much coincides with what I said last week. Now we're in this area where the support, and I apologize, I do have all of these things in here, but as you can see, there's a support from the previous low, and we also have the fib line, which actually broke. You have the 200 moving day average right here, which is still quite few part apart, but the next leg down, if this breaks, is that 200-day moving average, and that could act as a support. So all of these areas, again, even though it's hovering around this area, now two things could happen on any of these things, right? They could break and go further down. They could break and then make that previous low a resistant, right? So then you're gonna have a hard time, and you're gonna have to break that, and that becomes an issue when you're trying to go long. So that's always in the back of your mind, right? So if you're a swing trader, you want to be mindful of that. You also want to be looking at this MACD. You see the lower highs on this, higher highs on the mountain. This is slowly creeping upwards. So there could be another few days hovering around this area and then slowly creeping back up. That's what we're looking at. We've noticed, and we still have the highs over here. We got the next fib line. Below that, the fib line is over here. However, this fib line is way below the 200-day moving average, which this could act as a first level of support before it breaks down to the next fib level. And if that doesn't happen, then it'll do that. But if it does become a support in this area, then we're looking back into the mid band and then trying to see how price action works there. So play it accordingly based on that. Now, I know last week we had mentioned 3 stocks at the end of the show, and I made this video a little bit quicker just because I wanted to go back and talk about those 3 stocks that I had mentioned last week. And those 3 stocks, let's take a look at the first one. I think it was AFRM. And I was talking about how there was a cross that was going to happen. And that's exactly what happened. Look at that. It went up so high. Right? There was going to be some profit taking. Right? That's what this is all is profit taking. There was a crossover. You have this cross right here as well, which indicates people are taking profit. Now, you got the MACD over here. You got to keep an eye on, right? I mean, if this is truly an upward trend movement, these people are taking the profit, and then new money could come in right around here because the 50-day is above the 200-day, right? These people are taking profit. Remember, as people are coming down, you want to try to see where you can actually take an entry into a long, right? So I'm thinking, this has to stay above. As long as it's staying above, we want to look for an opportunity where this curves, like it may curve around over here. That means there might be some downward pressure into this 18 area. And when that 18 area is what you want to try to get into. And so when you try to get into this area, you're bound to make at least a couple of bucks if you're looking for short-term gains, maybe $2-3 and take a profit. And that's where you can do it. Long term, I don't know, right? This is a short term thing. Again, I don't like trading stocks, but a couple of you guys asked me what I look for. BXMT was the other one. So what happened here? Similar situation. The 50-day crossed over above the 200-day, right? When that happened, there was actually a lot of things happened, right? The lower band over here held through. You had to cross over the 0 line on the MACD. All these people were taking profits in this area, right? And this is why you see this downward trend. Now, next few days, this green 50-day moving has to stay above the 200. Now, you notice that the 200 has always been above the 50, which indicated this stock was lagging, and it was always, nothing that you would want to get into longs, right? Now that it's above the 50-day, there's a trend that's changing, and you'll see that these are lagging indicators that you might have missed it. Like, oh my God, why didn't it cross over here? But it doesn't work that way because these are lagging indicators. And sure, the movement might have happened here, but you never know. These could be fake, and they could have stopped right over here and went down, right? At least this gives you some sort of confirmation. This also, you see how it went above. The MACD became positive, and there was a crossover here. Generally, even though there was a cross over here, a couple of days it went across, you could have had another cross over here and it went down further. So that's why I don't like trading these type of things. Only when I know that the 50 is above the 200 on stocks. When that cross happens, and if you're looking for a short gain, this is the type of strategy that you can utilize. Again, wait for it. As you saw the cross happening over here, there's going to be a room for downward pressure. So this downward pressure is somewhere around here, where there's going to be some period where you might be able to get into a long if it gets there. And that's where it's going to be support. Now, I don't think I have the fibs on this, but let's take a look where the fib is. So you got the low over here. You got the high somewhere around here. Okay. So now look what happened, right? Like the 20, remember I keep saying the 23.6 is very important. After the high, it came down, hit the 23.6, right? It came back up. It actually went down to the 50. It went back up to the 23.6, crossed over and is trying to go back to the high. It didn't, and it came back down to 23.6. So now this 23.6 has to, and this is why a lot of these points that you see are hovering around this 23.6. We're going to be looking at a major support area if people want to get in on long, and then boom, back up. Okay. If this is truly a good news, Blackstone was a mortgage trust. I'm not sure. I mean, I don't know what this company does, and I don't trade stocks, but from the chart, this is what I see. Let's take a look at HBB. All right, so HBB, it had the leg down and was sideways trading. You had the crossover, the 50 crossing over to 200. Now that it crossed over, there's some room for some, buying opportunities. Again, you don't just blindly go in and buy because a lot of these other traders have already made profit. And they're going to take some of that profit and it'll bring the stock down for a little bit. The cross has already happened, so I'm right around here. So you're looking at some downward pressure. These people may take some profit. There's a downward pressure on this as well, the MACD pointing downwards. So why am I telling you this? Why is this an opportunity? Because it's crossed over, right? And so this is profit taking. You want to be mindful of how far this goes down. Look for opportunities. And this is why I point out, and I always tell people that, look, a lot of the time people come to me and say, hey, I bought this stock. The minute I bought it, it went down. Why? Right? So all of this news that came out or whatever it was, people are chatting, right? They're like, oh yeah, this is great stock, great scrap, blah, blah, blah. People are telling you, rumors are being out there saying, hey, this is the best stock ever. Everybody gets in, and you'd probably be the last one to hear it, get in around here, and next thing you know, boom, it went down. Okay, so, but problem is, there had to be some good news or whatever it may be. There might have been some news out there that has drove this price up. By the time you got the news, it's already too late. You got in, people are taking profits already. That's why the stock goes down. But now if you had paid attention and you realize that this stock may be a good long-term investment, then you don't just get in right away. You wait for that dip where people start taking profit. And that dip is where you wouldn't have to worry about getting in and then realizing the next day it just goes down. All right. Especially if that's a strong stock. But again, like I said, I don't know what the news is. I forgot what the news was on this. Hamilton Bean, the ex-dividend. Okay, these are all dividend dates. Anything coming out? A lot of dividend news. Nothing really. I think we'd have to do some more search on why this company. Maybe something related to earnings, right? But yeah, that's your due diligence, right? You want to do your due diligence. I look at short-term profit, get out, get in, get out, get in, right? That's all. I don't care really about the stock, and so that's why when you're trading some of these big stocks like Tesla, and I always keep coming back to Tesla because it's a very volatile stock. It moves up and down, up and down. You can't predict what's going to happen based on tweets. I remember I said there was going to be some pressure, and there's that pressure coming down. The cross had happened. It had reached. So actually, look at that. This was the high previously. This was the previous high. This was the previous. This never made it to the two previous highs. And I was actually pointing it out that this two never made it there. So then, of course, it's going to go down. And so that's exactly what happened. Boom, this leg brought it down, and that cross happened. So there you have it. I mean, Tesla is a prime example. I don't know what other method you guys want me to look at. Let me see. Give me another stock. Let's look at Apple. These are big names. All right. So, wow, I got the lows. Let's put some fibs on this thing. You got the low and you got the high. Okay. So once it hit the high, it hovered back down to 23.6. Went as below, trying to hit the 38.2. Didn't make it as far. went back up, hovered around in the 23, came back down, crossed over it, went up to the upper band held it in, came back down, broke the 23.6, came down, now it's below the 23.6. So downward pressure. That ended up happening right around here where it crossed below. Okay. And then you had this cross. And once that cross happened below the zero line, that means more pressure downwards. Okay. So now that it's downward here, you have to be mindful of, okay, look at this low. Oh, sorry. Next thing you want to look at, if you want to look at a log, is to see if this mountain holds in. Now you got a smaller mountain compared to the previous, splat right here. Is this gonna like? I don't think so. Like, look, this was a lot smaller mountain, and then the previous mountain is smaller. Right? You got this pressure downwards here as well. You got two candles, and then you got this doji looking upside down, doji looking candle right here. What do you want to do here? I don't know. Really, you have the support right here. You want to be mindful of that. Okay. You have the new iPhones going on the sale, right? There's a lot of chatter going on whether or not people are going to really buy this new iPhone because it didn't really make a big change on the phone itself. So now are they concerned about their sales, innovation? I don't know, right? Like you have to be very mindful. Like I can't guide you based on that stuff, but if I guide you on what I'm looking at, I'm thinking that look, this mountain is smaller. There's a support area here, and there's another support area over here. Okay, you got the 200-day moving average as well as the lower Bollinger Band all around in this area. So if it were to go down a little bit, I would say that would be possibly a buying opportunity, because this will eventually cross. This will come back into the positive, and you'll have an opportunity to go back and try to catch it. At least you should be able to make what $6 on this if you wanted to do a short term. And as you see over here, this is a long-term trend that went and broke. Okay, now that it broke, you have to be very mindful of this area. This is where it's splatted, right? So this area is crucial. You want to be mindful of this resistant area. It's possible that it might go back up to this 90 area, 190, and then splat back down. And that will all depend on the next month, whether or not their sales improved, whether there was any delays, any hiccups on the phone, and then you have to take it from there. But the area that you can get long on is over here and try to exit out over here based on what the market indicates with the news cycle. So that's what I'm looking at with Apple. All right. If you have any questions, please feel free to leave me a message, comment, like, and subscribe. Really appreciate if you go ahead and hit that subscribe and like button. It makes a whole lot of difference. Thank you for watching. PriceIsKing.com. I hope you like the new logo, guys.